Ladies and gentlemen, good day and welcome to the ZIM Laboratories Limited Q4 and FY25 earnings conference call, hosted by Go India Advisors. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Deepika Sharma from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Sejal. Good afternoon, everyone, and welcome to the Q4 and FY25 earnings call of ZIM Laboratories Limited. We have on the call Dr. Anwar Daud, Chairman and Managing Director, Mr. Zulfikar Kamal, Director of Finance, Mr. Shyam Mohan Petro, Chief Financial Officer, Mr. Zain Daud, Investor Relations. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company may face. May I now request the management to take us through the financials and the business outlook, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Deepika. Good afternoon to everyone. This is Anwar Daud speaking. A warm welcome to all of you joining us today for ZIM Laboratories Limited's earnings conference call for the fourth quarter and full year ended March 31, 2025. I trust you've had the opportunity to review our results and the earnings presentation available on the exchange. F25 has been a pivotal year for ZIM, a year marked by focused strategic execution, disciplined innovation, and resilient business expansion amidst a challenging external environment. Despite headwinds, particularly in certain legacy markets impacted by currency volatility and geopolitical uncertainty, our teams responded with agility and commitment, delivering steady growth across key strategic segments. Let me begin by sharing some key performance highlights. Of course, Mr. Patro, who will follow me, will be able to further elaborate on these numbers as well. In Q4 financial year 25, ZIM reported a total operating income of 1087 million, with EBITDA and PAT margins at 15% and 4.5% respectively. For the full year FY25, total revenue reached 3790 million with EBITDA margin at 13.1% and PAT margin at 3.2%. Our pharmaceutical continued to be the cornerstone of our top line, contributing 75% of the total revenue, while nutraceuticals accounted for 25%. Export markets contributed 83% of the total revenue. A key growth driver this year, I am pleased to inform, has been the strong performance of our innovation-led segments. The new innovative products and oral thin film sales together accounted for 624 million rupees, or 16.5% of total revenue. The NIP segment contributed 437 million, while OTF, oral thin film, contributed 186 million rupees. This momentum was fueled by licensing and co-development partnerships, especially in regulated markets, which accounted for 98 million NIP plus OTF contributions to total operating income was 19% in financial year 25. In line with our global expansion strategy, we entered into strategic collaboration, including a partnership with a local UAE company to scale our oral thin film footprint across the GCC region. We also established a scientific office in the Middle East and focused on our Australian subsidiary, Zintas Pty Limited, with the regulatory filings for innovative products currently in progress. They include oral thin film as well as the complex products that we have developed and are submitting in Europe and UK. To drive market penetration and accelerate international growth, we appointed dedicated regional teams and seasoned business development leaders across various segments. On the regulatory and filings front, we maintained strong momentum. In FY25, we completed 23 NIP filings for 6 molecules, 17 OTF filings for 5 molecules, and 10 FF filings for 5 molecules in the regulated, pharmaceutical, and ROW markets. These included 5 NIP filings for 4 molecules and 6 UTF filings for 2 molecules in the EU, taking cumulative EU NIP filings to 7 to date, and 1 NIP and 1 UTF filing in Australia through our subsidiary, ZIM Private Limited. We also received marketing authorization during the year for azithromycin oral suspension and dimethyl fumarate NIP. Additionally, our partners secured approval for buprenorphine sublingual film OTF across Europe. On the business front, revenues reached 665 million, contributing 17% to the total operating income, supported by continued supply of high-margin pharmaceuticals and nutraceutical products to government institutions. Our differentiated offerings, especially in NIP and OTF, are gaining greater adoption in institutional channels as well. In terms of infrastructure, FY25 marked the completion of key strategic CapEx projects, including a dedicated urology suite for NIP products, a specialized liquid and pellet technology suite for high-value OTC products, and we also made targeted investments in R&D, accounting for 8.8% of total operating income, along with advancements in drug delivery technology, further enhancing our innovation capability. As of now, our pipeline includes 12 NIP products, with development for 8 already completed, and the remaining will be finalized and filed through financial year 26, positioning us for future growth. There is a second generation of NIP pipeline available with us, and work has already begun on the same. While we remain mindful of macroeconomic and geopolitical risks, especially in volatile markets, we continue to operate within a robust risk mitigation framework. Our conscious decision to avoid high-risk orders helped safeguard our financial health and maintain business continuity. With that, I now hand over to Mr. Shyam Mohan Patro, who will walk you through the financial highlights for Q4 and financial year 25 in greater detail. Over to you, Shyam.
Good afternoon, everyone, and thank you, sir. I will now walk through you the key financial highlights for the fourth quarter and full financial year ended on 31st March 25. Let me start with quarter 4 financial year 25 highlights. The total operating income stood at rupees 1,087 million, reflecting a 12.9% increase on a quarter-to-quarter basis and a 7.7% decline on a year-on-year basis. EBITDA came in at 163 million, up by 22.5% sequentially, though 5.2% lower on year-to-year basis. EBITDA margin for the quarter improved to 15%. PAT, that is profit after tax, was at 49 million, marking a 22.1% increase on quarter-to-quarter basis, but a 39.7% decline compared to quarter 4 of FY24. The PAT margin stood at 4.5%. The pharmaceutical business contributed to 891 million rupees, accounting for 82% of the total operating income, reflecting a 20.6% growth over the previous quarter and an 8.8% decline compared to the same quarter last year. The nutraceutical business contributed about rupees 196 million, comprising 80% of total operating income. The R&D investment during the quarter stood at rupees 76 million, accounting for 7% of the total operating income. The capex for the quarter was 65 million rupees, primarily directed towards infrastructure upgrades and specialized facility enhancement. Now we'll move to the full year FY25, financial year 25 performance. The total operating income for the financial year 25 stood at 3,790 million rupees, reflecting a 3.2% year-on-year growth from 3,674 million in last year. EBITDA increased by 6.4% to 495 million rupees, up from 460 million rupees in the previous year, with an improvement of EBITDA margin, improved EBITDA margin of 13.1%. PAT for the year was rupees 122 million, resulting in a PAT margin of 3.2%. The pharmaceutical business contributed rupees 2,836 million, accounting for 75% of the total revenue, and the nutraceutical business contributed rupees 954 million, accounting for 25% of the total revenue. Export market contributed rupees 3,125 million, representing 83% of the total operating income. The domestic market recorded rupees 665 million, contributing 17% of the total operating revenue, total operating income. Annual capex amounted to rupees 360 million, supporting capacity expansion and product development. The finance cost increased to rupees 114 million, up from rupees 69 million in last year, primarily due to increased borrowing. The gearing ratio stood at 44%, with total borrowing at 1,122 million rupees. That concludes my remark. I'll now hand over back for a QA session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhwanil Desai from Total Capital. Please go ahead.
Hi, good afternoon, sir. So my first question is on the NIP. So I think in the Europe market now we have 2 regulatory approvals on our name and 1 for the partner. So going forward, how do we see the scale up of these 3 products in the European market? And especially the Nurex Farm, I think that's a pretty large product as far as I understand, and very few competitors in this space. So what is the indication that we are getting from our partners in terms of scale up? And can any of these products be more than $10 million kind of revenue potential?
Yes, a few of these products certainly have that potential, and we have agreements, not at liberty to disclose all of them at this moment, which points towards this. Just let me take a moment to introduce our technical director, Dr. Chandrasekhar Mende, who will give a few of the answers as well during this question and answer session. So, Dr. Mende, just if you can introduce yourself, and then I'll continue with my answer.
I am Dr. Mende, and I'm here to answer your questions about some of the NIP products. So, I want to mention about what your first question. The launch of the product is a complex procedure in the Europe, and there is a multiple languages and multiple artworks of the products has to be made. And particularly, you have asked question about the Nurex Pharma. They are already started the preparation for this thing and expected to launch in another 2 quarters about these products.
So does that?
Okay. So, yeah, I mean, how should we look at the revenue potential of these 3 products in next 2 years in this market is what probably you would want to understand.
It's too early. That there's a lot of geopolitical uncertainty. It's an era of shortages. We are well positioned, but giving numbers at this moment is a little too early. Perhaps as these MAs start coming in and our supplies actually start, that's when we will be in a much better place to be able to make answers on the number part. But certainly, historically these products, and we have been speaking about these products in our investor call as well. They have a very interesting global presence, and we seem to be positioned well with where some of these products, the competitive space is quite thin. So we are hopeful. and hope to perform on the lines that our stakeholders and investors feel this company will be able to do.
Got it, sir. I appreciate that. Sir, second question is, in last, 2.5, 3 years, we have almost spent 150 crores on gross block. So now our gross block has moved from 190 to 340 odd crores. So, how should we see the utilization of this incremental capex that we have done, in next couple of years? And at a peak potential, should we assume 650-700 crore kind of a revenue potential, as and when we utilize it to the optimal level? If you can throw some light on that.
Yes. In one word, if you ask me, yes, that's right. We are building in capex for the future. We know that the products we have developed have potential. We have had early successes in the MAs, receiving MAs, and our filing strategies in place. And our partnerships are in place as well. There's a rapid clip. If you see the under licensing income of this year, you will see the difference as well. So there's a lot of confidence as ZIM, as well as its partners, and their belief in these products which we have developed for the markets.
Got it. And last question. So on domestic side, our absolute revenue, barring the deemed export, is actually degrown from last year, while few quarters back we were very optimistic about domestic market, especially with our products launched in tie-up with the DRL for the urology side. So if you can give some color on that, and how should we look at domestic revenue growth going into FY26 and maybe 2-3 years perspective?
Well, I actually also spoke about there being a traction in the form of several NIP products being enlisted by the institutional buyer. So that's a very positive sign that there are institutional buyers now who want to favor these kind of products which add convenience and treatment adherence to the patients. There is a pipeline of products which have been filed with CDSCO as well, and we are in the process of receiving approvals for these products in India as well. So, and we will disclose these developments as they occur in due course. So we are confident, we are positive that over the course of time, I don't know because when we'll be able to give you the exact numbers, but you will see the domestic business also growing along with the kind of margins that these NIP products command globally as well. So that's the strategy. We are on that, and last year we saw several enlistments. And about Dr. Reddy's, this is a one-off year because they launched the year before that. So perhaps it's only one product. But Dr. Reddy's has shown interest in further products to be partnered with us. So that's a positive sign that we have an ongoing relationship and partnership. And this product also, hopefully, because it's part of a very of a portfolio that they seem to be keen and aggressive in developing. So it will, whatever the hiccup this year will not be there the next year, and we are still positive.
Okay, sir. I have more questions, but I'll come back in this. Thank you.
Sure.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Thanks for the opportunity. Sir, we have almost, 4 products for which we have received the regulatory approval, but then we are yet to start the commercial supplies for one of the products for which we have a tie-up with New Pharma. You have said, we should be launching in another 2 quarters, but the 3 other products, dimethyl fumarate, I think that's a very big product for multiple sclerosis. then azithromycin suspension and rizatriptan. When do you expect the commercial supplies to start?
Yeah, this is Dr. Mahinde. See, already we have a tie-up with our partners, and we to inform you that there is a complex process. Once we get the approval, particularly all partners wants to market the product. So we need to some procedures called the duplications of the licenses to the partner's name, and it is taking time for both the products, dimethyl fumarate and azithromycin suspension. These processes have been started. So we are hopeful to launch this product in the third quarter. Third quarter, mostly in the end of the third quarter, this product will be in the Europe.
Sure, sure. And for rest of the products for which we have done the regulatory filing and are, awaiting regulatory approvals, when are we expecting, for the urology?
See, as per the most of our submissions are done through the what we call a DCP procedure, decentralized procedure, in which we have filed in many countries. So most of our products, whatever 6-7 products we filed, already the first stage of the validation, means acceptance of product for the further evaluation has been done, and the most of the cases the calendar has already started. So in some of the cases we have at the different stages of the calendar. Somewhere calendar has been stopped because we have to answer some queries. So overall, I will say that we are on the track, and we are not out of the track for any product. We are on the way of answering all the queries. So hopefully, we feel that the most of the products can start getting the MA in the last quarter or the beginning of the next this thing, because we are expecting that. If anything is not specific, then in the next year, first quarter, we are expecting at least 2-3 MAs.
Sure, sure. So in FY27, second half, we'll have, 3 commercial launches, which would definitely happen. And hopefully, we should, at least in FY27 and or Q1 of FY28, we should see at least 3-4 approvals is what you are indicating?
Yeah, that's what it looks like. Everything going well, that's what it looks like.
Sure. Sir, on the margins front, we saw a significant jump in, our NIP plus OTF. They grew by almost, 64% in this financial year. But despite that, our margins have improved slightly from 11% to 12%. In fact, FY24 was a one-off year. If we compare even with the FY23, we have not, our margins have actually declined from 13% to 12% in FY25 compared to FY23. So, with NIP and OTF increasing, despite that, our margins have not, improved in FY25. So what has been the reason for that, and how do you see the margin?
You are speaking about average margins, right?
EBITDA margins. I'm talking about the operating profit margins.
So maybe our Finance Director, Mr. Zulfikar Kamal, will answer this when he is prepared for that.
Yeah. So, as you are aware, our EBITDA margin for 24 was 12.7 versus our EBITDA margin for 25 is 13.1. So there is a definitely slight improvement. But you are right in saying that the contribution to NIP product will, if it is increased further, there will be a sufficient improvement in the margin going forward. So once the NIP product, ODS product, what we are aiming at, once they increase, the EBITDA margin will also increase. And overall turnover, what we had started with the year for the target, as soon as the turnover gets increased, our EBITDA market will have a direct impact on the EBITDA, because the OpEx cost and other costs will practically remain the same.
Sure. So one, question, or if you look at the past 4-5 years, our revenues have remained in a range of around 300 to 400 crore from FY21 to FY25. Our EBITDA margin, despite all the effort that we are doing, have remained from, in the range of 40 to 52 crore in the past 5 years. Now, with so much CapEx being done, the NIP being commercialized, next two years, can we expect that, FY 26-27, we should start growing at 25-30%, and our margins should increase to 15-17%? Will that be a realistic expectation with so much of
That is a
R&D?
realistic expectation. That is a realistic expectation. There is some reason for that. Because see, although the business is about in the range of 20% of the NIP product. So, and the rest of the products on which the company works are own legacy products. Even though if they are complex, the competitive space is not so rare. The price pressure in these products is being more than offset by the new products. And the company is in the stage of a pivot. So it is letting go of some businesses as well, so that, because they don't make any sense for the future of what ZIM sees itself as becoming. So that could, all of these factors together point to a strategy. And just to, sum it up, we are on a strategy. And on the strategy, I think we are on the right track. Because the strategy of the company has been spelled out to its stakeholders and investors since the beginning. So shift from the old legacy products to new innovative products, increase in their business, tie-ups with strategic partners, submissions, going for the kind of products which I think the company has the strength to do. All that is going on in a strategy. So sometimes a mix of that is the result that you see in the financial statement. And just to explain it a little bit more, I think Mr. Kamal will.
Yeah. So as you rightly mentioned, the top line is totally dependent on the increase in the NIP product and the regulated market sales. But as you have seen, there is a operating cost has been rationalized. It is now on the similar line. And once the business mix changes and the business mix grows, the overall margin will definitely improve, both in the top line as far as and in the EBITDA margin also.
Thank you. Sorry to interrupt, sir. I would request you to rejoin the queue for your follow-up question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your question to 3 per participant. If you have a follow-up question, I would request you to rejoin the queue. The next question is from the line of Majid Ahmed from Pinpoint X Capital. Please go ahead.
Good afternoon, sir. I'm audible?
Yes.
Yes, sir. Thank you for the opportunity, sir. So my first question that I have is, of the NIP and all these filings have been done, how much is now currently contributing to the pharmaceutical sales? Whether FY 25?
I think we've already
mentioned that it is contributing around 16.4% of the revenue.
Okay. Okay. As per your internal target, what type of ballpark number can you give going forward of the overall contribution in next 2 or 3 years?
So as you are aware, we have already, as per the strategy, what we have already mentioned earlier, Dr. Daud, that our strategy is to go in for the regulated market. And whatever growth what we are going to foresee coming from the MA registered and under registration, so it will definitely increase. And it will be going around 30 to 40% in the coming years. And for that, the CapEx already, as mentioned, has been all completed. Capacity have been built. So only there is a certain regulatory delay which is not in our hands. And going forward, we expect that this contribution to overall sales of NIP and ODS will increase.
Okay. So thank you, sir. And going forward, sir, is there a plan to deleverage the balance sheet? Or are you going to do even further CapEx? We can get some idea of this.
No, as of now, the CapEx, whatever is in the normal stage, will be there to upgrade the facility. No further big CapEx is expected. We are awaiting all the MAs and registration to utilize our the capacity, newly built capacity. So it will be a better utilization of our, there will be a major improvement in the asset turnover ratio going forward. No further major CapEx is now expected.
Okay, sir. And what is the upcoming working capital days that you're looking to going forward? Will it be remaining same or it would increase going forward?
62 days. It is on the range. The inventory days is around 81 days, so it will be remaining the same. Debtors will, as of now, it is on 100 days cycle, but we are improving it to 90 days. It is overall GCA days, which is around 223 as of now. We are further expecting to reduce it further.
So net GCA.
And net GCA, if you see, it is on the range of around 63 days, which will be continuing on the same line.
Oh, okay, sir. Finally, sir, last question is what is your projection of your fixed asset turnover from this incremental CapEx you made? Any sort of numbers you can give?
A fixed asset turnover ratio, as I mentioned, it will all depend on getting the MA, but the asset part is now fixed. Only the turnover will improve, so definitely they will find an improvement in the asset turnover ratio.
Okay, sir. Thank you, sir. Thank you. All the very best.
Thank you. Ladies and gentlemen, please limit your question to 2 per participant. If you have a follow-up question, I would request you to rejoin the queue. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Good afternoon, sir. Sir, just first, I wanted to get a clarity. So, in terms of your NIP from the regulated markets, you are expecting revenues in this year by end of Q3 and Q4. Is that understanding correct? That's my first clarification.
Yes, our technical director already stated. That's what we are expecting. Although you know that you can't really predict how the assessors will, when the MAs will really come. But we are expecting. Based on the kind of success we have had with the filings, the queries that have been raised and the way that we have answered them, we do expect.
No, I'm saying so for right now you have dimethyl fumarate and buprenorphine. So in these two products, you are expecting revenue in FY26 from the regulated markets? Is my question?
Yes, that's right. One aside I want to give you is that these products have already, we have started marketing these in the emerging markets. These products have been 16% of the turnover of these NIP products came from the emerging markets, and they had a very positive contribution to the EBITDA in general. So the kind of margins we have imagined and the kind of business we imagine for these products, the indicative signs that today are very positive for us and quite heartening.
Right. So, sir, just asking a similar question, what was done asked by a previous participant. So, sir, you mentioned that these products, and you've seen very strong growth, and you're also saying that these margins are better, but it is not yet visible in the overall margins yet. I'm talking about operating margins. So, this is above depreciation and interest costs also. So, we've seen that if I see your base business, X of NIP and OTF and license income, that has actually declined from FY23 from about 380 crores to about 315, 320 crores in the last 2 years. And it has, last year also it declined and this year also it has declined. So, what is leading to that kind of decline? And notwithstanding that, will you see margins improve or will we have to again see very marginal improvement in margins if the base business continues to...
Sorry, sir, which numbers got declined, I'm not able to understand, because as per my...
No, so let me clarify, sir.
Yeah.
Sir, I'm saying, if I look at your overall turnover today, sir, and I'm excluding the NIP and OTF from that, So this year we have done 379 crores of income, excluding other income. And if we exclude the NIP and OTF income of 62 crores, then our revenue is around 317 crores. If I do the same analysis for FY23, sir, this revenue was 382 crores, which means that some of the business, which we call as base business, has reduced. Now, Mr. Dawood has said that we are also removing some business as maybe some of the low margin business we are removing, etc. Maybe that is also there. But I just wanted to understand that this expansion in NIP and OTF business, even if it is in emerging markets, which is also high margin, as per what Mr. Dawood just said, I wanted to understand when will we see that expansion in the overall numbers for the company? Will that be in FY26, or there is still some more culling out or more issues in the base business, and which will sort of hinder that expansion in margins for us to be seen, and maybe it is more towards FY27. So I just wanted to understand that.
Yeah. So this is again Zulfikar Kamal speaking. So you have very rightly said that, but you have said it in a different manner. The increase in NIP and ODF is our strategy. And NIP product for Europe regulated market, as Dr. Dawood mentioned, we are as per our strategy going on. But again, regarding the legacy product, there is a little bit downfall on the PFI side because of the headwinds which he has mentioned and the currency issues which we are facing, which has now been solved. And if you remember the last year's call, there was one of our customer who has been delayed. There was some currency issue with them. So that order delayed in this year, which has now been taken care of. And for the coming year, our legacy business will be stabilized at the rate which was going on. And going forward to the next question regarding NIP and ODF, all these products have been now under registration. The agreements are in place. And some part of, like today, that we have mentioned this year, it is 16%. We are definitely projecting a growth in the NIP this year also. But the exact estimate we will be giving only after first quarter. So that NIP is a contribution of NIP and OTF going forward.
Understood. And sir, one product I wanted to understand, so this dimethyl fumarate is a big product, and I think a year or two back, I think a lot of the generic versions, their marketing authorizations are also revoked. So right now, in terms of this product, what kind of competition is there, and what is your expectation from this product for us? And do we have multiple partners for this, or are we going like for the opioid product only with one single partner? So if you can maybe share whatever you can share with us.
So sometimes these kind of events are also good news for some companies, and Dr. Mende will take you through the technology that we have and what opportunities we have on this product, even though there were multiple partners and their MAs were removed.
I wish to inform you that this product is a very critical product, and we have something different technology from the innovator product. In spite of different technology and different pharmaceutical system, we have got a pharmaceutical equivalency and we have got a MA. And now we have already been in the talk with some of the companies for our specialized product, including the innovator who is marketing this product. Also, we have multiple partners, as I mentioned earlier also. Now, after the grant of MA, we are in the process of launching the product. Launching the product means particularly making that artwork, then the preparation, which market. So there is a language barrier. So many languages are there, and some making some leaflets and all these things for this thing. This is taking a time. So as mentioned in the third quarter, you will see our products in the market.
Got it, sir. And sir, just technically one thing. So when we say, so you will start booking revenues in the third quarter for your partner, right? Or will the product
depend on our partner? So that's the expectation. And just to add to what Dr. Mende he made a technical statement. So our process is not infringing. The reason for which the MAs were withdrawn was that their process actually infringed the originator's process. So there are a lot of there is some interest from potential partners whose MA was withdrawn as well for ZIM's product.
Right. Right. And sir, last question before I join back is that, sir, this partnership that you have with Global Pharma that you just announced last month. So can you share some contours of that? What exactly will it be? And when will, what kind of opportunity?
Sure. I mean, we have given out the information there. We are a very transparent company that way that whatever we can disclose has certainly been disclosed there. It's for the entire Middle East. And it's Global Pharma. If you go on their website, you will see the ownership as well. So you will understand it's a very strong company. It's like a flagship for the government, the country, and this partnership envisages a long-term relationship with Global Pharma and ZIM to put the oral film in the market, and certainly it's a very interesting role for ZIM to play in the Middle East.
Thank you.
And it's a 10-year partnership.
Thank you. The next question is from the line of Karthik from Samatva Investments. Please go ahead.
I hope I'm audible.
Yes.
Sir.
Yes, sir. Sir, the first question is, since we already have few MAs in our hand, and few have come pretty recently, and you have already clarified that we can see the impact on the sales from Q3 this financial year onwards. Can you clarify when is your production scheduled in order to revenue?
Productions are scheduled based upon after the dress, the packaging and all those artwork and everything is finalized, and it's entirely in the hand of the partner. So once we receive the order, certainly we'll start our manufacturing activities, and we will schedule for some kind of a launch that they have. It will be well in advance, certainly, of their launch. It is difficult to predict when we will start manufacturing. We have the capex, we have everything in place now, and the agreement with the partners as well. So now, just waiting for everything to fall through from the partner side so that we can be we can start our activity and they can be in the market.
Right, sir. Right, sir. So to get the sales from there, I am hoping that either in Q1, which is the current Q2, the next quarter, we have to get the production done. So I'm hoping that all the procurement.
We'll be clearer about the numbers by between Q1 to Q2, and we'll be very happy to share them with you.
Yeah. So no, my question was around, so the procurement of the raw material, getting that and getting the packing material, getting the production, dispatching, receiving there, and then doing sales, all that should happen within the next 4 months, right?
Yes, we are expecting that.
Okay, sir. Okay. So my second question is, so we have had the domestic revenue in the FY 20.
Hello.
Sorry to
hello. Am I?
Yes, sir. We lost your audio. Can you please repeat your question? Thank you.
Sure. Am I audible right now?
Yes.
Yes, sir, you are.
For domestic revenue for FY 24 was 64.6 crores, whereas in FY 25 it declined to 53.6. I also understand that there was a statement made that voluntarily we are also not interested in certain low margin business that was there. And another statement saying there are headwinds with respect to volatility in certain markets because of currency and all. So since I'm restricting my question to only domestic, how much of this 17% degrowth is related to voluntary reduction and how much was regarding the market?
Well, it's the market in the sense this was an election year as you understand, institutions make their budgets only. Actually, there is a kind of stoppage or pause in orders from institutions during the election, and after that, there's a note system. So this happens only once in 5 years, and that's what happened this year as well. I'm sure this will pick up this year, but we will be, as you have also been able to repeat that for us, that we are very mindful of not doing the things that other institutional players do. We are enlisting our NIP products, and we'll work in complex products. So those, by definition, are going to be, although there's an increase in a very heightened interest in these kind of products by institutions, and they have margins and less competitive space. But that's the strategy, to be in the institutional business and out-licensing business in India with high margin products. And we'll certainly keep on sacrificing the low margin business.
Yeah, specific to your question, there was an order of Government of Maharashtra on 24 of around 20 crores, which because of the election year of 20 crore order was not received in the year ending March 25. And it did not report for the next year. Only one order was there, which has made a little bit of difference.
Great, sir. Great, sir. Just related question to that domestic sphere itself. We have a star product, at least within the urology space, and which is in NIP, and we are doing it with our partner, Dr. Reddy. How is the performance of that? Incremental growth happening in that month?
Dr. Reddy can do it. Absolutely.
At present, Dr. Reddy has launched this product in the limited segment with limited states. And from this year onwards, I think they are planning to take the products to all the states. They are marketing state-wise. So we are expecting growth from that.
Okay, sir. So the new urology suite that you have just done the capex for, does that cater to this as well?
Yeah.
Great. I'll join back in the queue after others. Thanks.
Yeah. Thank you.
Thank you. The next question is from the line of Shyam from Atlas Financial Partners. Please go ahead.
Thanks for the opportunity. My first question is with respect to how does ZIM plan to accelerate institutional channel penetration domestically, especially for its differentiated NIP and OTF products?
Can you repeat yourself, Shyam?
Sure.
It wasn't clear.
Okay. How are we planning to accelerate institutional channel penetration in domestic market, especially for our NIP and OTF products?
Well, we are in as I already told you, there are two areas in which, because ZIM has a strength in the institutional market. So we have started registering these products with the institutional buyers, and we have had a fair degree of success last year. And the results will be there the next year in the domestic business as we go forward. That's one. The second part is out-licensing these kind of products to Indian partners. But we are, being careful about the tie-ups here, because we don't want the products to be compromised in our export business, where we have already signed decent agreements. So it's taking us some time to select the right partner for the right product. And we are in the process of appointing a domestic out-licensing head, executive who understands these nuances of these products, and with the right connection. Perhaps that strategy would actually add to a more structured format for the out-licensing business domestically.
So are we in discussions for new MAs for institutional channel in domestic markets for our NIP products?
Yes. That's what I said. We are enlisting these products in the institutional markets.
Okay.
And we have had some success in last year.
Okay. So my next question is with respect to the ZIM's strategic intent to focus on Australia through its subsidiary. So if you can put some color on that, how it would be and what would be covered over there.
Zulfikar will add.
Yeah. So in Australia, we have filed two products. One is NIP and one is ODF, which has already been mentioned by Dr. Raut, and we are expecting to get their MAs immediately. We have already in discussion with major distributors as products are registered in our own subsidiary and the MA belongs to ZIM itself. So we are finalizing that marketing agreement, and by second quarter or third quarter, we'll be able to have a clear idea of launching of these products.
So how big is the market we expecting in Australia, and what will the contribution in our top line from Australia?
As of now, it is too early because once the MA and the price are fixed, then only we'll be able to get the proper projections from the marketing and the distributors, and that time we'll be able to understand the exact margin.
Okay. And so my next question with respect to the research expenses that we are doing, what is the proportion that is going into salaries and what is the proportion that is going into buying of testing machines or other expenses?
So R&D expenses, as informed to you earlier, it is around 8.5%, and which will be on the similar line going forward because we are now started developing our NIP2 line, and this will be giving us the technology and what Dr. Daud and Dr. Mendes are working on it.
Thank you. The next question is from the line of Nikhil from JM Financial Family Office. Please go ahead.
Yeah, hi. I'm still new to the company. One thing I wanted to understand is that if I see the historical growth rates, etc., over the last many years, the growth rate has been fairly muted. And now we are talking about, say, something like a 25-30% growth rate in the next, say, 2-3 years. I'm just trying to think, why has the past performance been so slow? Is it because the product approvals have taken time, or is it that the strategy was getting built out at that point of time? And to avoid a similar slow phase of growth, say, in the next 10 years, I'm just saying, in a big picture way, what is the steps which we are taking that this thing doesn't repeat in the next 10 years, basically?
So, hi, Nikhil, this is Zaid. So, I think, like you rightly said, in the last few years, what had happened is once we took a strategic pivot, the company of this size in a pharma industry, there is only limited amount of investment and limited amount of focus we can have. So, we decided that our strategy, like we have told investors before, is the Europe and developed market strategy. So once we started that strategy, obviously some of the focus was on that, and like any strategy in pharma, it takes some years to progress and bear fruits. So I think this time when we have this strategy, once the strategy play out, Dr. Daud will explain to you further how this strategy is going to play out in the next few years.
Yeah. So see, it's a company which is pivoting from the ROW domestic emerging market business into the regulated markets business. So the capital investments, the recruitment, everything is being done keeping in mind our products and where we want to be in the next few years. So the pivot itself has dictated the strategy of, if you see the internal product mix, there's a big difference. The contribution is now, nutraceuticals is about 15%. Then the contribution by the NIP and ODS business is in the range of 16%. So, and this is just the ROW and emerging market business. I also spoke about the gross margin improvement. How even the small business, about 10% of the total business, has contributed to the increase in margin. So all that is also reflected, even though the top line remains the same. The MAs coming in, the patents we have, the kind of agreement income that we have, the out-licensing income is a very good indicator of the quality of your dossier, because we have the agreements are, the out-licensing deals are with companies in the size of between 350 million to about 1.5 billion. And they will not sign these agreements unless they are confident of the product as well as the quality of the dossiers and the quality of the submission. So all that is there, which gives us a lot of satisfaction that we seem to be on the right track. And top line is not, for a company like this, top line is not the only indicator of success.
No, I'm sure you're right, but it's just that, finally there has to be growth, right? And the strategy, as you're rightly saying, is tuned to that going forward. So I understand it's taken some bit of time, but with the pipeline which is in place, as you're saying that we should be now growing in the range of, say, 25-30%, say, in the near term, so the next
we have already said that. We've already said that. In the next 2 years, the first question was about this, and it's a kind of a yes or no required from us. In the next 2 or 3 years, do you see the company growing? And we said yes, certainly. Because all the MAs are coming in now, and they're coming in the 3 more quarters that we have spoken about. And some of the MAs which are already there, there is a pretty active interface with the partner on the artwork and all other things, and along with his, the kind of the intent to place orders and the kind of quantities they want to buy initially. Our marketing team is also growing, and we'll continue that for the next few years as well.
Understood. And the last bit would be, as these products come into actual market, how do you see the EBITDA margin profile really changing? Like, what kind of improvement one can expect, say, the next 2 to 3 years?
Diversified can add to that.
So already, remember we have mentioned earlier, the EBITDA margin will definitely have a big impact on it, because the operating income, everything has been rationalized. The R&D expenses, even though it is little bit high, we foresee a good EBITDA margin on upper teens. We are expecting that going forward.
Understood. Perfect. Great. Thank you so much. Thank you so much.
Thank you. The next question is from the line of Shreya Chatterjee from MAIQ Capital. Please go ahead.
Thank you, sir, for taking my question. So my first question is with so many developments happening in the NIP OTS side and then base business also suffering, could you please give us a guidance, revenue guidance in the next 2 to 3 years? And when do you see the margin inflection happening, EBITDA margin inflection happening? Would it be from FY26 or from FY27?
So already we have mentioned earlier and again, we are looking for the upper teens EBITDA margins, and definitely with the whatever has been said on the regulatory front, because something is not in our hand, and once the regulatory things approvals are received, our top line will also increase. And as we have mentioned, the capex and everything is in place. We are hiring more marketing team for growth. So perhaps this year there can be a good growth, but the exact earning guidance we'll be able to give you from the second quarter
to third quarter.
So if I understand correctly, how much does this NIP plus OTF can become as a total % of your business? Can it go to 25-30% or 50%?
Over a period of time, it could be half and half.
It can go up to 50% also.
Yes. Over a period of time.
Over a period of time. But exact guidance we will not be able to give this today. It will be able to only give after second quarter, where we will be very much clear about from our MA received and the marketing partners what we are already agreed with.
And so my second question is, do you have any plans of deleveraging as of now? And if so, what is the plan to go forward?
No, as we have mentioned, the capex has already been closed. Our borrowings have been already closed, so and we have been able to finance all these things from internal accruals and borrowing. So going forward, there is no plan of deleveraging or any adding it.
At this moment. As of this moment, for sure.
And so if I may know your current capacity utilization and what will it be like in the future?
Pardon?
Current capacity utilization and what will it be like in the future?
Capacity utilization.
Yes.
Yeah. Capacity utilization as of now is, as we have mentioned, both the suites are now ready. It is as of now very low. Whatever we are ready for the turnover and whatever this will be there will be no further capital expenditure going forward.
Okay. Thank you, sir.
Thank you. The next question is from the line of Bajit Agrawal, who is an individual investor. Please go ahead.
Hello. Am I audible?
Yes.
Yeah.
Yeah. Hi. So I just wanted to understand, like, what kind of steps are you guys taking in terms of marketing? Employee cost should stabilize around 65 to 68 crores for FY26.
That's right. That's right.
Hello.
Yeah. The employee cost is also keeping in mind the next 3 years of the company has, and keeping that, I think it will more or less stabilize. Now we have the right number of personnel and executives, highly qualified members in the team, take this company forward in the regulated markets. And we just spoke about, in due course of time, having a half and half mix of business in the regulated and emerging markets.
Got it. And I just wanted to understand from Dr. Mende, since the research work that you guys started in 4 years is almost going to come to an end in, let's say, FY27, what is the future pipeline and what kind of R&D are you guys looking at in the future? In terms of products, platforms?
As I mentioned in our talk, we are already finishing up our first NIP products, and we have already selected the other NIP products which are also on the same line. They are also differentiated NIP products, and most likely these products are more complex and they are first to file. So already we are in that direction. At this moment, it is very confidential to disclose anything, but these products will also based on our platform technology. So we will have two protection from our platform technology. It is under well patented as well as the product patent.
Got it. I just wanted to understand, this fiscal Bangladesh and UAE, what is the percentage of revenue that they've contributed?
We don't give out such details.
It is difficult to let out that detail between formulation and others. But going forward, once the business mix will be stabilized, we'll be able to disclose.
Got it. Okay, that's it from my end.
Thank you.
Thank you. The next question is from the line of Ashwin Reddy from Samatva Investments. Please go ahead.
Yeah. Hi, good afternoon. Thank you for the opportunity. So my first question is on the, say for FY26 and for FY27, what would be the absolute spend on the R&D and on the capex for each of the years? I'm at least an approximate plan that you have for the next 2 years. R&D spend and capex.
So as far as I mentioned, capex all the major capex have already been completed. There will be only the capex will be more on the upgradation and improving technology. No further major projects will be taken forward. As far as the R&D, it will be on the similar absolute numbers which we'll be spending to keep the R&D momentum of NIP and NIP pipeline going forward. With the same BE and the filing budgets, we have already approved BE line for bioequivalence study products going forward, and filing will continue on the same absolute numbers. So in short, it will be in the similar line.
Okay, got it. Got it. And my second question is on the legacy business. So when you said that the currency issues with large client have not been resolved, so would the legacy business stabilize at the current level, or should we see a recovery back to the previous levels in terms of the legacy business?
No, it will be seen back to the previous levels, and there will be a nominal growth also on the same line, on the legacy business.
So, was I saying that the legacy business will come back to where it was in the past?
Yeah, it will be as per the past trends only.
Okay, got it. And the final question is on the phase 2 of the NIP, which is starting now, where you want to do work now. So from the phase, the whole learning from the phase 1. So can you talk about the key learnings in terms of the go-to-market or in terms of your approach? Understanding the end market, understanding the ease of sale, the partnership, the whole bit. What are the key changes that you would want to make in the phase 2 of this journey?
Yeah, the learnings are the kind of learning that apply to any new entrant. First of all, the strategy for filing, where we need to file, where we don't need to file. Okay, the kind of partners we need to approach and what stage we need to approach them. Perhaps some of the approaches were too early and some of them were too late. So we have to be very strategic the moment we select the product. We have to be strategic about the partners with whom to get in touch without losing confidentiality. So that's one of the learnings. The other learning is the filing strategy. And I feel every stage of this kind of business that a young company, for this kind of business, we are a young company, does, will always be learning. One of the things, one of the good outcomes of the learning on trying to enter this kind of a market is having an understanding of the general regulatory tightening in even the emerging markets, which is standing us in very good stead because of the kind of quality system we have built for exporting our products to the regulated markets. I think we are having a far easier time in the regulatory tightening that is happening domestically as well as in the emerging markets.
Here, one of the learning what we have taken, earlier we are giving our dossiers, particularly all dossiers and our partners are filing. Now, we are also, as a ZIM also, we are filing and investing in so that at the end of our process, ZIM will have also its MA on its own name. Once we have a MA on its own name, we can have all rights to multiply the MA. We can have many partners. So now we are keeping almost all rights with us, and most of our deals, whatever now we are signing, are non-exclusive. So this gives us the very wide chance to have approach to the many customers and maximize our efforts in all markets. In Europe, there are 26 countries and so many players. So this gives us quite a non-exclusive deal, gives us quite a flexibility to approach to multiple partners once we have a MA in the place.
Understood.
Everywhere, this is our strategy. This is the opportunity that presents itself to any company once its track record in filing, in making these kind of products, in having the bioequivalence and having partners who have a certain reputation and prestige. So once you have that, then you have the flexibility and the opportunity to be able to dictate some terms. So that's a learning, and we have learned that well, and we are able to use it.
Understood. Great. Great. Thank you so much for this, and wish you the best of luck. Thank you.
Thank you.